Welcome back to Everything Money. In this video, we will talk about Baba's newest earnings. We'll talk about how it affects their stock price. We'll show you the numbers through a fundamental analysis using our software and take these financials and show you how to translate them into a stock price you should be paying for Baba. Spoiler alert, we love it right now. We'll also head over to Mo. He'll show you all the trends and charts if you want to trade Baba at a quicker pace. But first, why should you watch this video? I bring your questions about Baba, their earnings, and their future potentials to a couple guys who own and operate over $100 million in real estate, multiple businesses and stocks, and we will talk about Baba and their mindset right now. Welcome, Paul and Mo. How are you guys?
So they got trashed a lot because they missed their revenue growth. Meanwhile, their revenue increased by 29%. They also changed their guidance up.
What does that mean? Because I couldn't understand that.
It's what they think is going to happen going into the future.
Yes. So their number of active users was up 62 million to 1.24 billion on Alibaba. Revenue up 29%. Guidance was for revenue growth was 20 to 23% for 2022 when the market was expecting 28.4. On Singles Day, they did $84 billion in one day. This, to me, is a prime example of when you expect so much from a company, eventually they're going to miss, and it's going to send shares crashing down. Couple that with China fining people and starting to shut down. Guys, I just don't believe that's going to happen with a company like Baba. Baba's too important to China. Way too important to China. It's the most successful company in China. They're not going to mess with it. I mean, if China wants to be a global leader, what better way than to have a successful company in China be a global leader? It doesn't even make any sense to me. So I think this is an overreaction. The stock is down to 140 the other day. Now it's 137, right?
Mm-hmm.
I'm just going to be picking up more shares as it goes down. It's my largest holding right now, and I'm in a big loss right now. I think I'm down 20% on my holding. I'm okay with that. Mo, your basis is 151 right now, which is a great basis to have for Baba. And as it goes down further and further, I've sold more puts, and I'm just going to keep doing that.
Mo, your thoughts?
I look at it saying, okay, they missed their revenue grew at 29%. Why? You look at what happened in the past year, especially in China. We have supply chain issues. We have pandemic that happened. Did you expect? I think that these expectations are kind of ridiculous. I mean, they're growing at 29%. That's incredible. For a company to grow at 29% and the stock lose 15% in a week, I'll take that all day.
Well, again, it's all about expectations.
I also look at it, our numbers that we put in, our valuation. I think, what were we, at 15%?
Yeah, but that's over a 10-year period.
True, but even if they get to that level and stay there, I find it hard to believe that they're over a 10-year period, they're going to grow less than that.
And this is what accentuates the importance of being conservative, guys. The goal of this channel is to teach a process. And part of that process is be conservative and there's 10,000 companies out there. Be conservative, make conservative assumptions on as many companies as you can that you like, and buy the ones that are selling for below those conservative numbers, because you will be wrong at some point. The goal is to have a higher margin of safety. The more margin of safety you have, the more you can be wrong. But if you're assuming 30% revenue growth for Alibaba for 10 years and it doesn't happen, you're going to lose a lot of money. Look what happened when they missed for one quarter. Mm-hmm. They went down by 20, 30%. That is the key to the whole process here. That's the point of the software. The software is there to provide stock analyzer tools so you can research the past and then make assumptions about the future. The future is unknown. Because between now and 10 years from now, we're going to have international tragedies. We're going to have local tragedies. We're going to have changes in politicians. We're going to have so many things happen. You have no idea how that's going to affect Alibaba. It could be better than we expect. It could be worse than we expect. But the point is, if you have 20 to 40 companies that you buy individually, that you make conservative assumptions on, eventually, with an ample margin of safety, you will do very, very well.
Can you double down again on the idea, especially for our new investors out there, Paul, the idea of, as a value investor, when we find a play like Alibaba and then we buy and it goes down, that internal feeling of I've made the wrong decision. What's your mindset as a pro investor for 20 years?
This was hard for me to get around. I sit there and say, okay, am I going to wake up 10 years from now and Alibaba is still going to be here? If my answer is yes, then I ask the question, okay, if Alibaba is here in 10 years, are they likely to be making more money or less money than today? If the answer is more, okay, how much more? 10 years from now. Let's say that went up 7% a year. That's doubling. Okay. If they make double the money that 10 years from now they do today, what would the company be worth? Okay, I think it'd be worth $500 a share. Okay, am I okay paying $140 for it today? 137 for it today, knowing it could go down to 100 or 80, but feeling very confident that it'll go up to 400 or 500 at some point in the future? If the answer is yes, that's what you need to be training yourself on. But it's not just about Alibaba. It's about a package of 20 or 40 companies. You need to do this on 20 to 40 companies. Because guess what? Of those 20 to 40 companies, some will be worse and will maybe go to zero or be bought out at a lower price. But the vast majority will do what you think or do better than that. And that's the goal of value investing. It's not even the majority. If you just have 30 or 40% do better, you're going to kill it. But the goal is to sit here and say, it's like sitting there and saying, okay, I just had a fight with my spouse. Do I think I'll be married to my spouse in 10 years? Yes. Do I think I will never have a fight in the next 10 years? Well, of course not. Of course I will. Great. Does that mean I'm going to bail on the relationship every time we have a fight? No. Okay. Then we'll get through this fight. We'll figure it out. Income. Will I be making more money than I did 10 years from now than I did today? Yes. Okay. Will my net worth be higher? Yes. Does that mean that if the market falls by 30%, my net worth will not go down? Well, of course it will. Great. But I'll still be worth more 10 years from now. Apply it to every facet of your life. It's no different. Alibaba, I believe, will be a bigger company 10 years from now, making way more money. And 10 years from now, I think it'll be worth a lot more money per share than it is today. That's what I'm banking on. Along the way, this is going to happen.
I think that the Chinese regulation is being over dramatized, especially because if you look what China does for big startup companies, especially tech companies, they give them massive incentives. And I think that I read that Alibaba was paying like a 10% tax rate, because they incentivize them to get bigger and bigger, and then at some point they have to pay because they're at the point where they can afford to do that. And if that's what the Chinese regulation is now, it's being very over.
So how do you factor that into our stock analyzer tool then in the future? If you think there's going to be higher taxes coming, all you do is you put in a lower profit margin and a lower free cash flow margin. Yep. Seth, why don't you pull up our stock analyzer tool?
Okay, guys, this is our software, the Everything Money software. We'll talk about how you can get a hold of this later. But this is the chart for Alibaba, and look at this thing crashing down, Paul. We were doing videos at 200.
Do 5-year chart.
Look at this thing. Yeah, look at this.
I mean, this was at $320, $300 some dollars a share, and okay, it's selling now. So here's the deal: it's selling now for the same price it was back in July of 17. Go back to July of 17.
Oh yeah, look at that. 105. July. Yeah,
yep.
You're
so
right.
We're looking at going, okay, now look at the income statement. Go look at 2018. It was doing $17 billion in revenue. Now it's doing $120. Scroll down to profit. It was doing $7.5 billion in profit to $23 billion. So guys, this is my point. One of the things I'll tell you is, if I told you in 2018 that the profit of the company would triple, the revenue would go up 5 or 6 times, but yet the stock would be the same price, you think that's crazy. It's called overvaluation. It wasn't worth that back in 2017. And eventually it came, now it's not, it's worth way more than it is today. So these things always work itself out. Just like it can go to a level that doesn't make sense on the high side, it can go to a level that doesn't make sense on the low side. If you can agree with one, you have to be able to agree with the other. If it can go to a price that's so high it doesn't make sense, it can go to a price that's so low that it doesn't make sense. That's your goal. Mm-hmm. So now go to the 8 pillars tab. Let's just check that out. So they've increased their shares, which doesn't bother me so much because they were massively overpriced for a while. But look at the valuation numbers. And those valuations don't even like cry to me as bad.
No, yes. I mean, you look at a 5-year PE of 22.5. That's compared to what's going on with a lot of these massive companies, not that bad.
Yep. And it's barely above our 22.5. So go to the stock analyzer tool. So the stock analyzer tool, guys, the great thing about this is it allows you to make your assumptions about the future, and it'll tell you exactly what to pay. We've done so many videos on this, and every single time we do different numbers in it.
Yes.
So Seth, do years of analysis. Go to 10.
Okay.
Because I believe you can do 1 to 20, but I do 10. Okay. Revenue growth. 15, 20, 25. Even though I'm apprehensive about 25.
Yeah, it's a lot, but it's okay.
Profit margin.
Profit margin, I would do 17, 19, 21. Same thing with free cash flow margin. I went lower because of the taxes.
Okay.
PE, I would do 15. No, I do 14, 16, 18. Just hit shift tab.
Okay, 14, 16,
18.
18. Shift tab goes back?
Yeah.
I'll be darned. Of course they did that.
Same with price to free cash flow.
14, 16. You learn something new every day.
This guy's business is on a computer and he still isn't 12.5% all the way around because, guys, you can invest in a market-based ETF to make 9 to 10%. You might as well make it worth your while.
You should see me on Photoshop.
$39. There you go.
So I look at this saying, okay, The issue I had with Alibaba months ago when I didn't buy it wasn't because of overvaluation. It was because of China. I just didn't know if I trust the numbers out of China. Charlie Munger trusts the numbers out of China for Alibaba. Therefore, I do. I have no idea what Charlie Munger values Alibaba at, but I look at this saying, this is a company that I think I'm going to wake up, and if I don't accumulate a good enough position, it's a company where I believe if I accumulate a 2 or 3% position in my portfolio, that it could be a 10, 15 bagger at some point down the road. And I would love to have that.
Yep.
That is my goal on Alibaba. Now, my goal is to do that 20 to 40 times on 20 to 40 companies, probably 30 companies, and hopefully over time it builds up that way. But that's just the way it is here. I look at Alibaba going, I think it's people being dramatic. They're looking for, whenever people are negative about something, they tend to exaggerate that negative. I think that's what's happening here.
15% in 1 week because of a growth rate of 29%, and people didn't like that. I mean, that is dramatic, and it's still going down. Now it's more than 15%.
If you're looking to get this amazing software and the stock analyzer tool, Paul will tell you how to grab it right now.
The reason why we made the software back here that you're seeing is our viewers wanted to be able to analyze their own companies without waiting for us to make every freaking video about every company out there. So we made the software. We committed hundreds of thousands of dollars to it. With the software, you can sign up. You get everything you've seen here. You get it all on your mobile phone. So literally right there, you can do all of this on the mobile phone. You get 2 or 3 exclusive videos per day. We actually just got a text from Tim saying, hey, we need more exclusive videos. We're running out. You get access to Seth Moe and I. You get 30 years of financial data. You get the real estate analyzer tool. You get everything that's here on the front page that's coming soon. You get all the tools plus everything coming soon. And the most importantly, if you feel like you're alone in the way you think about investing, and that's why you're gravitating to this channel, we have over 6,000 people in our chat talking about investments every single day. You get access to all of those. You can talk about any investment you want, even crypto for those of you who love crypto, even Tesla for those of you morons who like Tesla out there. I think it's a value play. Either way, you can get it all for only 90 cents per day. 90 cents per day. That's all it takes. It can change your financial future. If you just save 1 or 2% per year on your losses or make 1 or 2% per year more on your gains, you will end up with hundreds of thousands, if not millions more down the road. 90 cents a day. 2 ways to sign up, everythingmoney.com or Patreon. Either way gets you access within minutes. The benefit of everythingmoney.com is you don't pay sales tax yet because we're not large enough. So sign up, 90 cents a day, no brainer. I can't believe we're still talking about it. You should be clicking on it right now.
And that's our take on Alibaba. We will certainly update you with one of our favorite stocks and our biggest positions. Stay tuned. We love this company and we love the stock price. So fondle thumbs up. See you next video.